Hey everybody, this is John. Welcome to the free video and let's dive right in. So as I've been talking about fairly frequently, especially in the premium videos, is that in this market we have been hedged for two main reasons. One, the 10-day moving average of the put-call ratio dipped below 0.80. That, I mean, in my experience over the last 10 years, always sets us up for a pullback. We never know exactly when it's going to happen. But at the same time, in conjunction, we had a squeeze on the VIX, all right, and we got paid today. So we had the puts on the spiders, puts on the Qs, calls on TLT, and calls on the VIX, as well as a couple of just shorts and stocks. Today we took all those off as the VIX peaked up at about 20 points. And what was the reason for that? Well, we did come down and we slammed into, if you look at this prior support level here, the first thing is that right about here, this 2890-ish level, we've spent a lot of time here, and this became a big support level. And so yesterday we bounced off of it, but you can see we did not close up above the 8 EMA, so hedges are still on. Today we actually came down and then retested support here at 2865, and that was enough. And at that point, for hedging, the reason you hedge is because the potential upside at that point is less than the potential downside based on the factors that we're looking at. And then from there, at some point, you got to take off your hedges. Well, here, I think the downside is actually less than the potential upside. That doesn't mean we just bounce. But one of the things is that when you do get two closes above the Bollinger Bands on the VIX, 90% of the time you do bounce the next day. And what I thought was interesting today is that this is the first time, well, not the first time, but this is the first. I thought we were below. We were pretty close. But typically when we do get back below, we did get below 117. This is the first time we've been below 117 since here when we bottomed in December. We got close here but didn't get it. That's also bullish. So that may be all the selling. We'll see. But at this point, I do now want to start focusing back on the long side of the market. One stock that caught my eye today was Texas Instruments. If we do look at this one, you've got a daily squeeze. And then also, if you look at the small lot component of this, it does, for the most part, qualify. I don't know if I'll do this in our small lot portfolio yet or not. I'm just going to kind of see how the markets kind of react tomorrow. But on Texas Instruments, you can see we're in our buy zone here. We do have a squeeze. We're already through earnings and dividends. And so now we have the potential to kind of pop back up. And then the other one I like here is Ulta. This is one where today it did have a little bit of a rough day, down 4 points, but it's still holding right in its buy zone here. You got a wobbly squeeze, but we do have earnings coming up, and we are fairly close. We're within 12% of new all-time highs, and we do have earnings coming up. So I do like this one as well as a potential run. All right. So that's what I got there. All right. And real quick, we are going to have a free webinar. Two people you may or may not know. Actually, Allison you may know. Jack may be new for you guys. Really awesome background in terms of what he's been doing. But they are going to jointly be putting on our free webinar this upcoming Thursday, May 9th at 7 o'clock Central. And he's basically talking about how both Jack and Allison swing trade options. All right, and they both combine this really great, their strategies that they do separately, actually when they come together, create a lot of synergies. And so what they're going to be focusing on is how to profit from longer term momentum plays, how to determine position size with the 25% rule, secrets for timing high confidence options trades. And again, remember, this is on a swing basis. How to extract profitable insights from internal company reports. This is really awesome. And then how to consistently predict big pullbacks without being psychic. Now, for both of them, both Jack and Allison have been in the markets. You might look at them and say, gosh, it looks like they're pretty young and they haven't been doing this for a while. They've both been doing this combined over, I believe it's over 13 years. Maybe now it's over 15. Jack grew up in a household where they're all involved in business and equities. And Allison, at an early age, got taught to trade options by her father and has carried it on to this day. So it's just really cool in terms of being able to kind of get something like this and just get some unique insights that are not your run-of-the-mill, yada, 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 this is how the stock market works. They're coming at this from an angle that is going to be, I think, surprising and refreshing for everyone who has a chance to take a look at this. All right, Thursday, May 9th, 7 o'clock. We'll see you there. Hope it helps, and we'll see you at the next update.